You've probably heard this story by now, right? That China's economic miracle has run its course, that its best days are in the rearview mirror. Well, what we're going to dig into today is a forecast that flips that entire script on its head. Let's see what the data is really telling us. For the last couple of years, this idea of peak China has been everywhere. It's this notion that the world's second biggest economy is hitting a wall, that it's about to slow down, maybe even stagnate. And honestly, it's pretty much become the consensus view. But just for a second, what if that whole story is just wrong? What if, instead of hitting the brakes, China is about to slam on the accelerator in a completely new direction, a much more powerful one? Okay, so this all starts with what looks like a tiny detail in some economic forecasts. The market consensus, everyone else, thinks China will grow at about 4.5% in 2026. But Goldman Sachs, they're saying 4.8%. Now that little gap, that 0.3%, that's not just a rounding error, it's a signpost pointing to an entirely new global economic reality. So what in the world is behind that surprising optimism? Well, the answer is a powerful new trend, and it has a pretty dramatic name: China Shock 2.0. We're going to break down what this new engine is, and maybe more importantly, how it's about to reshape, well, pretty much everything. So what is it exactly? Well, the definition is actually crystal clear. China Shock 2.0 is a deliberate, strategic pivot by Beijing. This time, it's not about flooding the market with cheap stuff. It's about a full-on export blitz of high-tech gear, and they're aiming for nothing less than total dominance in the industries of the future. To really get it, you gotta look back at the first China Shock. Remember that? That was all about cheap t-shirts, plastic toys, the stuff that really disrupted low-skilled jobs in the West. But this is a whole different beast. This new version is targeting our most advanced sectors: electric cars, renewable energy, semiconductors. It's a battle for technological supremacy, and that's a whole different ballgame. And they're leading this charge with three main spearheads. We're talking electric vehicles, renewable energy tech, and advanced electronics. China is pushing so hard in these areas that it seems like not even major tariffs from the US can slow them down. And this whole strategy really reveals a fundamental choice they're making. A lot of Western economists say China needs to get its own people to buy more stuff, to boost domestic consumption. But Beijing is doing the opposite. They are pouring resources into industrial and tech capacity. Just like the quote says, they're prioritizing production over consumption, all with one clear goal in mind: dominating the global market. So when a move this big happens, there's going to be a reaction, right? The rest of the world isn't just sitting back and watching. China's move is triggering a global countermove. And you better believe a high-tech revolution like this is hungry. It needs a ton of raw materials. And that has kicked off this absolutely relentless global scramble for the planet's most critical minerals. And hey, this isn't just some abstract idea. You can literally see it in the markets. The price of copper is up 34%, cobalt up 39%, and that's happening because you've got both China and the US trying to build out their new industrial infrastructure at the exact same time. But among all these materials, there's one resource in particular that is becoming the absolute key to the future. Get this, 55%. That's how much the price of neodymium has jumped in a single year. It's the essential element you need for the permanent magnets inside electric car motors. And a price spike like that just shows you how fierce this competition for critical resources has already become. So, the West is definitely pushing back. But what's really interesting here is they're not all on the same page. In fact, we're seeing two very different strategies emerge. Two fortresses, if you will, being built with two different blueprints. On one side, you've got a country like Canada, which is playing the economic game. It's using things like tax breaks and Buy Canadian policies to try and build up its own supply chains. But then you have the United States, which is taking a much harder line national security approach. It's looking at things like the lithium reserves in Latin America as strategic national assets and is actively working to counter Chinese influence in the region. Okay, so you've got China's big plan and you have the West's counterstrike. So what happens when these two massive forces collide? Well, what's emerging from the dust is a completely new and, frankly, much more fractured world order. And this brings us to a really profound conclusion. The old model of globalization, where everything was interconnected and everyone sort of grew together, that's basically over. We've entered a new age of what you could call competitive industrialization, where these two fiercely competing economic and industrial fortresses are being built. And guess what?
The people with the money are already way ahead of this. They're not waiting around, they're voting with their dollars. Goldman Sachs, for instance, is forecasting a 16% return on emerging market stocks by 2026. Capital is already flooding into this new economic reality on both sides of the divide.
In fact, you can see exactly how pro-investors are playing this through specific ETFs. For example, there's one called REMX that focuses on rare earth metals. That's a bet on China's critical needs. Then you have PIC, which invests in the big global mining giants. That's kind of like playing both sides. And then there's XME, which bets specifically on US mining companies, a pure bet on the American countermove. The financial markets are already mapping out this new geopolitical world.
So, all of this leaves us with one huge hanging question. In this new world of competing economic fortresses, who's going to be building the bridges and who's going to be building the walls? Because the answer to that is going to define the rest of our century.